Greetings and thank you for joining us at FutureMoneyTrends.com. I'm here with Chris Marchese. I've known him for a few years now, seen him annually at the Palm Springs show. I think I saw him last year at San Francisco, the hard asset or metals and minerals show, which actually is not going to be continued any longer. But he works with David Morgan. He's a former hedge fund manager, and he's also a top research analyst for the Morgan Report. Chris, thank you so much for joining us.
Great to be here. Chris,
by the way, I know this is probably a 2 or 3 week old story now, but what were your initial thoughts when you saw that the Metals and Minerals Conference, probably one of the largest conferences in the U.S., the United States, I know they had always been the hard asset show. Then last year they changed it to the Metals and Minerals Conference, and then now they've come out and said it's canceled indefinitely. Is this kind of like a clear sign of the bottom here?
I think so, because, it was canceled in both San Francisco and New York this year. A lot of the exhibitors are junior mining companies, which just have no cash whatsoever. The equity markets are still bad for that part of the industry, and they're just not willing to spend the cash to go to shows like this. So I think you're correct in saying that it's a good sign of the bottom. And, I think we've been bottom bouncing for the last year or so. And given what's going on in the world and the world economies, aside from the headline data, which is, supposed to think, everything's rosy and whatnot, the bull market should be resuming, I think, the last quarter of the year.
So the overall mood of the resource sector, because I know you research a lot of these companies and probably interact with a lot of the management teams. Are they starting to get optimistic, or are people still having trouble finding capital?
I think they're starting to get a lot more optimistic. There's a lot of private equity money that's coming in. The equity markets are a lot better than they were for the quality companies, at least. And I think everyone realizes that these calls by Goldman and whatnot, gold going down to 1,000, are just bogus, because we see every time we see gold drop to below 1,300, 1,250 or so, the buying really picks up in the Eastern world.
Have you had time? I'm sure, obviously, we've been in this for a few years now. Have you reflected on what everyone missed? When gold and silver, I remember when silver hit 49 and gold, I think several months later, hit 1,900. When they first pulled back, no one really thought we were going into the last 2 years of what we just experienced. And certainly, even when gold got down to 1,600, 1,500, there were still many calls for 2,000 gold by the end of that year. And then it just all kind of turned into a disaster, especially in the junior space. Have you given thought to what did everybody miss? What was there that really we kind of couldn't see because we were, so bullish on the precious metals? And, I guess everything's in place. I mean, here you got QE, you've got the Fed printing, you've got government debt, so everything was in place. But still, I mean, these mining stocks got decimated, with the TSX down 75%, and of course the precious metals down significantly. What did everybody miss 2.5 years ago that just nobody really saw what we just experienced?
As far as the metals go, it should be expected that there would be a correction of this type. Not necessarily magnitude and duration, but after over a decade of higher finishes in gold and silver, it's natural to have a contraction for a few years. So, and in terms of the mining sector, I think mining companies got complacent. They were spending recklessly. There was a lot of fat in terms of excess spending that was going on in terms of G&A, sustaining capital, expansionary capital, and whatnot. And, most companies can generate free cash flow when the gold price is up at $1,900 gold and $38-40 silver. But when you come back down to $20 silver and $1,200-1,300 gold, you really got to get your house in order in terms of cutting costs to the bone, which the good companies have been able to do, and others haven't.
Yeah, no, that's kind of the exciting thing right now, I think, for buying now, and is that the quality companies. I mean, now, 10 years ago, if you were looking for a 10-bagger, you might be looking for just, Explorers or something. But now, even like the First Majestics of the world are beaten down to the point to where you could see, you definitely could triple your money over the next few years, which kind of leads me to your favorite sectors within the junior space as far as commodities. Are you guys looking at specific ones, when just throwing out silver, uranium, coal, that those kind of investments, or do you have some favorites out there that people should start looking at, and some reasons why?
Uranium is a great one. Japan just restarted some reactors, and the price is just gone. The spot price has just gone to absurd levels. So, that's a good buy, in my opinion. In terms of the Morgan report, we advocated going long zinc around 80 cents, and that's been one of, if not the best performing commodity over the last year. Got up to about almost $1.10 a few 2 weeks ago, I believe. And that's just due to supply-demand fundamentals. Same goes for palladium. We've been long that for some time. And, with China passing the pollution controls that will be phased in, catalytic converters will now be required in cars there, which drives up the demand precipitously. And there's no reason that palladium should be trading so much lower than platinum, because there's lower supply, and they're basically used for more or less the same things.
Do you think the resource sector and investors might be potentially about to experience a little bad luck, where we have a bottom in the bear market, but it's at a time where the Dow is near an all-time high? I guess my biggest concern when I buy resource stocks right now is that the U.S. is overdue for a correction, and the U.S. is overdue for a recession. Or not maybe overdue, but cyclically it's about that time, every 7 years. And, by the way, a side note, because I know everybody will say we're in a depression. I totally agree we're in a depression, but officially we were out of the recession. So anyway, do you think we could be potentially setting ourselves up for some really bad luck here, where right when we get into the resource sector, the Dow tanks, the U.S. economy slows down, it causes Europe and the rest of the world to slow down, and commodities to go back into an even more severe bear market?
That's an interesting point, because I've actually been thinking that for a while. That's why, personally, I've put a lot of sell stops on a lot of my equity positions and just gone into the futures market, because I think this time around, gold and silver will be going up instead of 2008, where everyone was where there was forced liquidation. Mm-hmm. And so I expect those two metals especially to do very well, and even better when I think the U.S. economy could be in an official recession by the final print of Q2 GDP. I mean, yes, it was 4% on the first print, but that's an uneducated guess at best. Inventories made up a lot. Excess inventories made up a lot of that. So, it's very interesting times here, and across the Western world, especially with Obama's recent sanctions on Russia, which is just outright stupid to do because Putin can put the hammer down anytime he wants on the U.S. dollar. He'll just, tell Europe, we're not going to sell you any oil or gas in U.S. dollars. We'll sell you it in anything else but U.S. dollars.
Mm-hmm. Yeah, the U.S. certainly is quite vulnerable here, and Obama is looking for financial fights when he's the emperor with no clothes. Chris, in closing, are you allowed to talk stocks? Do you have a favorite stock that you want to just mention to our members, or is that only for the Morgan Report paid members area?
That's only for the Morgan Report paid members.
All right. Well, if somebody would like to learn about your guys' top picks, as well as read your guys' research behind the scenes, where's the best place for them to go?
You can go to themorganreport.com or silver-investor.com. They lead to the same site.
All right.
And you can join our free newsletter and take a look at all the tiered services we offer.
Well, Chris, I look forward to hopefully seeing you in Palm Springs this year again in February. It's always fun hanging out, and certainly I think we missed it last year, but we got to check out the LG Steakhouse again. That was a great night with you and David Morgan. So you guys have a great week, and thanks very much for taking the time to talk to us.
My pleasure.